There's a lot of doom and gloom in the crypto community at the moment as Bitcoin is retracing and alts again absolutely hammered. However, in this video, I'm going to be going over why we need to be a little bit more patient and what my strategies are for buying this dip. Starting off then with some TA on BTC. So we're on the weekly time frame. As you can see, we're currently sat on this weekly level of 65.5k, which is the 236 level on the fib retracement. So a level we've interacted with quite a lot in the past. As you can see, it was the previous cycle's highest weekly candle close as well. We've tested it both as support and resistance many times in the past. So if we go back down to the daily time frame, which is probably the more relevant time frame at the moment, you can see we've been stuck in this daily range for a couple of months out, ever since sort of late Feb, early March. So range high of 73k, range low of 60.5k, and a mid-range of 66.7k. So we talked last week about the importance of needing to hold the daily mid-range and the daily moving average 21 as well. Unfortunately, we lost both of those. So first of all, we lost the moving average on Tuesday on that big dump, retested it as resistance and failed to break it on the Wednesday. And then on Thursday going into Friday, we also lost the daily mid-range, which has now flipped as resistance, as you can see. So we had a little rally over the weekend right up into that daily mid-range, and now we've rejected off of that today. So not looking too good. Looking very likely we're going to head back down to these daily range lows around 60.5k. You can see we're well below the RSI 50, indicating weakness there, and the trend bar on the LC trend and momentum indicator has turned red as well, indicating, as you can imagine, a bearish trend. So if we zoom out again back onto the weekly time frame, the reason why I talk about needing a little bit of patience is we've got to understand and take into account where we are in terms of the cycle. So as we well know, we are well ahead of previous cycles in terms of price action in relation to the halving. So we've never before broke all-time highs before the halving, which we of course have done this time around. And not only that, but this time of year as well tends to be pretty quiet. If we take a look back at last year's summer, so this was June, the end of June, all the way up until the beginning of August. This 6 weeks here, very little price action whatsoever last year. And then if we take a look at previous cycles in terms of the halving as well, so if we take a look back at what happened after the halving in May 2020, so this was the halving here. I think it was around the 15th of May, in and around mid-May. You can see we had a long period of pretty much nothing. We had a little bit of a rally here in sort of July, end of July, start of August, but apart from that, very flat until we of course got that huge breakout and run to new all-time highs. And then the cycle before that, back in 2016, if we zoom in here, so again, the halving of 2016 came in around the beginning of July. I think it was around the 11th of July. And again, we had a big drop. It doesn't look like a big drop, but percentage wise, it is pretty big. If we take it from the top there, it's about 18%, bit of a drop, and then a little bit of inaction before the big rally up. So again, it took about 12 weeks for things to kick in. So if you take that into account as well, no reason why the same thing can't happen in and around sort of maybe the end of August, start of September of this year. Remember, we've also got the US elections coming in around that time too. So the market's obviously very tightly correlated to the US elections as well. So let's take a look at Ethereum and then some altcoins. So if we take a look at Ethereum on the weekly time frame, again, not looking too good. As the short term, you can see we made a lower high here on the weekly time frame a couple of weeks ago, and that is now playing out, showing some more weakness, probably heading towards the weekly moving average 21 and all that weekly level of $3,060, which we flipped to support quite a while ago. If we go down to the daily, again, failure to hold the daily level of 3685 and the moving average 21 a couple of weeks ago, which indicated weakness. Again, similar to BTC, we came up, retested the daily moving average 21 on the 12th of June, rejected off of it, and again we had a nice little rally over the weekend, but ultimately rejected off the daily moving average 21 again this morning, and yeah, not looking too good. Probably heading down towards that daily level of 3250, where a potential bounce there. You can see a big level of support and resistance in the past, but again, same as BTC, we're below the RSI 50, We've got red trend bars on the LC trend and momentum indicator as well. So in terms of the short term, not looking too good. Momentum is certainly to the downside. One thing to keep in mind though, one small ray of potential sunshine is the ETH BTC chart. So I've talked about this over the past couple of weeks. Very important monthly candle close last month. You can see we've got this monthly range here. So range high at 0.08, range low at 0.05. And you can see we look to a breakdown and then we suddenly got this large rally, obviously down to the ETH ETF news. We got that monthly candle close back inside the monthly range low. So a nice deviation of the range, which is usually a very bullish sign. And we are currently holding within that range, which is good. If we take a look at the weekly time frame, you can see we got this again, that nice strong weekly candle close well above the weekly moving average 21. Now the big difference between what's happened here and what's happened the previous two times that we've done this, as you can see, the first time in a long time that we closed above the weekly moving average was back on the 8th of Jan. Strong weekly candle. However, the following week didn't do much, bit of a doji candle, and then the following week from that we closed right back below the moving average 21 again. So no follow through from that sign of strength. Again, a couple of weeks later, on the 19th of Feb, we had a nice strong weekly candle close well above the moving average 21. The following week, we closed right back below it again, both times rejecting off of that weekly level of 0.06. But this time, as I say, is a little bit different. So on the 20th of May, nice, big, strong weekly candle close. Again, bit of a doji the following week, and then we did retrace it slightly the following week after that. However, we held that weekly moving average 21 both that week and last week, and currently still trading above it at the moment. So there is potential for this to start trending upwards and maybe take on that weekly level at 0.06 again. Now, again, as I've said many times before, this is just an index. It's not an actual asset, the ETH BTC chart. So take technical analysis on these types of charts with a big pinch of salt. However, not only are we holding above the weekly moving average, but we are also holding the RSI 50 as support, and we've got a green trend bar on the trend and momentum indicator as well. So if this was a regular asset, so you know, an alt USD chart, then I would definitely be looking at that as a beginning signs of strength, potentially starting to trend upwards. So something to keep an eye on and to bear in mind. So speaking of Ethereum and altcoins, let's take a look at what my strategy is for potentially buying this dip, or how I'm going to approach buying this dip. So at the moment, as I say, if we just quickly flip back to BTC, actually, what you've got to bear in mind is what we've had in terms of retracements in the past. So we're pretty used to 30% retracements on BTC in previous bull markets. So I've marked them out on previous videos. So far, we've currently had a 23% pullback, which was the pullback from the current all-time highs of 73.5k down to 56k. So, you know, we're still nowhere near the bottom of that wick. So we could well retrace all that way again. Whether that happens or not, let's hope not, because alts have been absolutely obliterated with the shallow pullback that we've currently had. But that it is possible, so there could be more downside for alts. So what you don't want to see, or what you don't want to be doing rather, is buying the dip that keeps on dipping. Alts have been very relatively weak compared to Bitcoin, and that could continue. So BTC could still go down a little bit further, and if so, alts could continue to bleed against it. So you need to have a strategy on when and where to get in on your altcoins, whether that be to bring your dollar cost average down, or whether it's to enter fresh positions, or whether it's trading. As I say, you need to have that strategy rather than just blindly buying the dip that may just keep on dipping. So let's take a look at these 5 altcoins that I've got marked out and the strategy I'm using for them. So it's essentially range play. I'll start on ADA. So you can see I've broken ADA up into 2 ranges. So I've got this upper range here. So a range high of around 60 cents, range low of 40 cents, mid-range coming in about 50 cents. And then this lower range where the range low is 25 cents, the mid-range is 32 cents, and the range high is the same as the upper range's range low, which is around 40 cents. So as you can see, we are right on this weekly range high, weekly range low, 40 cents area. So big important level. If we break below this, then we're re-entering into the lower range, and that opens up the door for 32 and potentially 25 cents. If we can hold here and have a positive bounce and reaction, then of course we can stay within this range and maybe make a rally up to the range highs. But you can see on the weekly time frame, well below the moving average 21, well below the RSI 50, a red trend bar as well. So it's not looking great. So what I'm looking for, as I say, is a positive reaction from this weekly range low, at least a hold on the weekly candle close, if not a bounce. And if we go down to the daily time frame, what I'm looking for to coincide with that is a deviation of this daily range low here. So you see these daily range lows of around 42 cents. What I want to see is a daily candle close back above these daily range lows, maybe even a close over the daily moving average 21. And then I've got a clear invalidation of how and when to exit my trade. So if we were to get a daily close back above the daily range lows, then a daily close back below, then I know that the trade idea is invalidated and I can just cut my losses for a very small loss. So that's what I'm looking for. And of course, if we do get that, then that opens up the door to rally up to the daily mid-range and daily range high of around, so mid-range coming in at about 46 cents, daily range high coming in around 52 cents. And then of course, on the weekly time frame, if that plays out, then we could start seeing a bit of strength on the higher time frames as well. So that's what I'm looking for on ADA. The similar story across the rest of altcoins. So Algo, you can see we've got this weekly candle close below these weekly range lows of around 16 cents. If we go down to the daily time frame, again, you can see that these weekly range lows are very well respected on the daily time frame as well. So I'm essentially counting that as a daily range low as well. So once again, I want to see a daily candle close back above these daily weekly range lows of around 16 cents, maybe, as I say, even above the the daily moving average 21 as well, and we can start seeing that strength. However, as you can see, not looking good today at all. In fact, I think we've been dropping quite a bit since I started this video. So yeah, these may not happen, but of course we could get a big flush out, a big spike, and then suddenly things start rebounding. But these are the the triggers I'm looking for to potentially get in. And again, this is why I say you don't want to just blindly buy things that may keep on dipping. You got to remember last summer, or last cycle I should say, we had a 50% retracement on BTC, and altcoins got wiped out there as well. So as I say, even in bull markets you can get these pretty brutal pullbacks, so you want to be careful about when you jump into things. So moving on then to AVAX, you can see we are on the weekly, or we were on the weekly range lows at the close of last week at around $30. Mid-range coming in $40, range high at $50. So again, same story as the previous two. If we go down to the daily time frame, again, on the daily time frame, these weekly range lows are well respected on the daily time frame too. So I want to see at least a daily candle close back above the weekly range lows of $30, and then we can start seeing a deviation, potentially a run up to the previous highs. And again, on the weekly time frame, if this weekly candle were to close below the range lows, then I would be waiting for a weekly candle close back above and start that deviation process. Because of course, if the weekly candle closes below $30, then who knows where we could drop to. So yeah, we want to make sure that that process has started before, or that trigger condition has been met before jumping in. Final two then, DOT. If we go to the monthly time frame, this is currently sat on monthly range highs of $6.27. So again, you don't really want to see a monthly candle close back inside this range. You can see it's been very strong support and resistance all throughout DOT's history. You don't want to see a monthly candle close back inside here. We've got another 13 days for it to hold. If we go down to the daily time frame, once again, you can see actually DOT is a little bit different because DOT is still within its daily range. You see it's coming down to test these daily range lows down at $6. So again, if I don't really want to get involved here because we've already had two bounces off of these daily range lows, so I'm wondering whether these are going to hold again. But essentially what I'd rather see is a big flush below the daily range lows, take out all these stops here below these 2 wicks, and then get that deviation like I've said on the other pairs. And then I've got a clear invalidation of where my trade idea is wrong, which is a close back below the daily range lows, and then we can go from there. And then finally, FTM, if we go into the weekly time frame, you can see close below the weekly range lows of 65.5 cents. Starting to turn on the moving average as well, which is not a good look. So again, I want to see that weekly candle close back above the range lows, back above the moving average 21, and on the daily, got this daily level here at around 61.5 cents. You can see big level of support that we've held. We've not closed below this level since the 2nd of March. So huge level, and you can see we're dropping well below it at the moment today. So I want to see this level either hold today or get reclaimed over the next few days, and we can start that deviation process on the weekly time frame, on the weekly range lows as well. So that's what I'm looking for over the next couple of weeks. So let me know what your strategy is over the next coming weeks in terms of buying the dip. What altcoins are you looking at? Are there any that you are adding to your portfolio, or are there any that you are dropping due to poor performance? Let me know in the comments below, and I'll see you on the next video.